Hey, CFMA. My name is Peter Harris, and I have a background in revenue recognition, and that's what I will be speaking about today. The question that we have today is, when does a construction company recognize revenue for financial statement purposes? This is addressed in ASC 606, which is a recently passed standard. And what's interesting about 606 is that this has been a joint conversion effort with the International Accounting Standard Board, and they produced IFRS 16. The result of this collaboration is standardization of revenue recognition across all companies, industries, US and worldwide. So what 606 has done, they standardized how revenue is reported, not only for construction, but for every company. Previous guidance, which was A605, was industry specific, which resulted in more than 100 different revenue reporting approaches. One approach was specific to the construction industry. What's interesting about 606 is even though they've standardized the reporting requirements, it's based on the IFRS principle-based philosophy, which has a lot of judgment. So it's not a rules-based standard, it's a judgment-based standard. And the result of it is there's going to be a lot of management input into assumptions and judgments. All right, so the core guidance of 606 is that an entity should recognize revenue to depict the transfer of control of goods and services to customers in an amount that reflects the consideration to which the entity expects to be entitled for those goods or services. In doing this, ASC 606 requires the application of the 5 following step model in accounting for revenue recognition. So it's a 5-step model, and we have to follow each step in the recognition of revenue. Step 1 is identify the contract with the customer. Step 2 is identify performance obligations of the contract. Performance obligation is basically what the contract has to perform. What is it that the contractor has to provide in this contract to the customer? At the minimum, there has to be one performance obligation, but there may be more. All right, the issue here is change orders. Is a change order going to be a separate performance obligation, or is it going to be part of the original? So that's a judgment call that's going to have to be made by management. Step 3 is determine the transaction price. The issue here is that now we have to account for what we call variable consideration, liquidating damages, unapproved change orders, claims against customers or against the contractor. These have to be accounted into transaction price. So there's going to be a lot of judgment here. And in the construction industry, claims are very common. So expect to see this in basically every type of construction type revenue contract. Step 4, allocate the transaction price in each performance obligation. This will be based on the standalone price of each performance obligation. And again, we need some judgment here. And step 5 is recognize revenue when or as the entity satisfies a performance obligation. The terminology has changed from previous guidance, but the idea remains the same. When is basically the completed contract method and applies generally to short-term contracts. As is what we had before, what we called before is a percentage of completion method. And this generally applies to long-term contracts. And under the as revenue recognition, we have input and output methods, which includes cost to cost, which would be an input method, and output methods such as milestones reached and units complete. So nothing's changed here with step 5. The application of these 5 steps, as stated before, will be judgment-based. There's a lot of judgments that will need to be made in applying the revenue recognition. The result of this is that different revenue recognition reporting amounts by companies will result, and this will be based on different assumptions made by management. And what's ironic about this is, despite a standardization of revenue reporting under these under the 5-step model, revenue reporting will differ from company to company because of this judgment that's imposed by each of these 5 steps. So that's going to be the interesting thing going forward. The result of this is added disclosure under 606, so the users can understand how management has derived revenue. I thank you for listening to my presentation, and hopefully I can follow up with future presentations addressing each one of these 5 steps. Thank you.